to the stock market morning prep video for Monday, August 11th. The bounce that we were looking for came to fruition. We did get a nice, decent bounce right after around about 10:30, 11 o'clock. Markets kind of stabilized a little bit and then kind of grinded higher. Typical Friday price action. Very, very quiet though. Right around 11, I would imagine, just under that, and then we just kind of grinded higher pretty much most of the day. Dow Jones actually up 1.13%, 185 points. Nasdaq up 35, S&P up 22, and a Russell up 11.59. So not a bad day, but we were looking for that bounce. We did get it. But I tell you, markets were weak pretty much all morning, and then we did get some good news, some decent news that Russia wants to de-escalate the situation in Ukraine, and that kind of sparked a little bit of a positive feel to the markets. And plus, you get a Friday in the summer, usually is bullish. But we do have some indicators that were telling us that we were ready for a bounce. I'll go over them with you again. I'm still looking for somewhere around 1940-ish in the ES for a possible reversal. And again, when I say that, I mean that the market, not price has to trade there, but we have to trade there, and then we have to get a sell signal. Otherwise, the market can continue to go higher. So let's run through the indicators that we were looking at. Here's stocks above the 50-day moving average. Again, when it gets down to these areas, logical spot for a market bounce, and sure enough, we did get that. NYUD, which is the advanced decline with volume. I love looking at this particular indicator. Big area here for a bounce. As you can see, if you look, they both coincide nicely with market reversals, at least in the short term. This here actually did reverse, so let's see if we can get some further movement to the upside to get some good short position. Now, the McClellan oscillator also is very reliable. And remember, pretty much most of 2014, other than early in the year, we got this low, but we never got this low all year, and then we just went sideways pretty much the rest of the year as well. And then we got a nice little bounce here. So looking constructive. Now we need to see, is this for real, or is this just a dead cat bounce? Because remember, when the markets are in short-term downtrends, you get these fierceful rallies that really rip to the upside, and then the market just reverses again. This here, again, a big area for a possible reversal. We did get that, but look what's happening here. The bullish percent SPX barely just curled over. I'd like to see this give us a buy signal back up to the upside before I get really excited about any type of swing trades. Right now, day trading is the way to go. Swing trading is really, you're left susceptible to the market, and that's something that you don't want to do when you're trading. Let's take a look at one more, the SPX and the ATR. So when we have expansion of volatility, really swing trading is not a good thing to do. When you want to be down here, this is what you want to do, right up in this area here. Now, we did have expansion of volatility pretty much most of the year. As you can see, the market still kind of grinded higher. But again, I think this is a little different. We have this move here lower, which is nice. Markets moved up, and now we're back up to the 17.5. A little bit higher might put us out on this indicator here, maybe some washout conditions where we have extremes, and then we want to see this start to trend lower again. That's really what you want to see, and then you want to see the other indicators actually reverse as well, like it's starting to do. So we'll just keep an eye on things here, but the indicators are pretty good, pretty reliable indicators that we look at, and as you can see here, it's a nice little guide, and really that's what it is, just a guide to give you a heads up to say, okay, well, we're a little bit oversold here, we're pretty much due for a bounce. So I do see some continued strength, maybe today, tomorrow, even into Wednesday, but it's a little iffy. Remember, news trumps the charts. At any given moment, we can have something like Russia invades Ukraine on a full-fledged war, and then as you know, we dropped bombs in Iraq on Friday, and this is just a crazy world that we're living in right now. So anything could happen. So just be on your toes. All right, the bonds, ZB. Well, we got a big, huge spike here, 140.11, very, very close to our target of 140.22. But I do think, again, I would be looking at bonds on any deep pullbacks. You want pullbacks right here. You want pullbacks to a 20 or the 34. I wouldn't chase it up here. But yeah, it looks like we're coming to our target. And the ES, We're looking for a 41, somewhere in the 40s, 1940, 1950, right up in here. This coincides nicely with some overhead moving average resistance. I'll show that to you in hourly. We do have a cluster as well, right up in this area here, 30, 35, and then right up in here, 50 percentile, 50% Fibonacci retracement comes in at 1947. So anywhere in this area here, we can get some sort of reversal, some sort of a sell signal. I'd be inclined to sell the market. And diamonds here, I got some downside targets. Again, if it ran up to 167, I think would be fine for at least a little bit of a push lower. But right now, just again, a dead cat bounce, a little bit of retracement rally. I think we get a little bit of follow through, even if you get back to this area up here, this top of this gap. That would be an ideal situation to possibly re-short. But we need to see how the market reacts when we get up to these numbers. Same thing here with IWM. Right up in this area here, nice overhead moving average resistance, bear flag as well. But let's see if this starts to break the bear flag. I mean, beautiful, beautiful lower lows and lower highs. So we're definitely in a downtrend. We've been a downtrend in the beginning of the summer, actually, in the IWMs. And IYT, we held this little area of support, which I had marked for a few months, and now we're starting to retrace back. Again, overhead resistance. There's a lot of overhead resistance too, so hopefully this can hold. I'm really looking for. I mean, this is pretty close to government's work here for this downside target of this moving of the lower upper trend line. I'm really looking for the bigger picture right here, the 200-day moving average, or close to it. So let's see what happens with the transports. And lastly is the Qs. Let me get that. That's the corn. Lastly is the Qs is sitting right back on this upper trend line. Let me just move this back up again. And now it needs to start to move up. Now, believe it or not, the Qs have been, the NASDAQ, have been holding up very, very well. And it's nice to see that at least technology is holding up. But it's funny because we had semiconductors that were losing luster. I'm surprised how the Qs held up well. But anyway, use caution. Be nimble in your trading. And I would, if I was give somebody advice, I would be looking just to day trade. Swing trading really isn't there at the moment. We don't have the market to swing trade. I mean, you can if you have a longer term time frame objective, not more than 3 weeks. Then I wouldn't swing trade. If you're looking for months out, then maybe you might want to buy the dip, but it's got to be based on your trading plan. All right, everybody.